Telehealth is revolutionizing healthcare, and one company leading the charge is obviously HIMS and HERS. As I mentioned in my previous video, a lot of people have expectations of 10x, maybe even more, when it comes to the stock return in few years' times. HIMS obviously smashed expectations last year. They delivered 1.5 billion in revenue, which was roughly 69% jump compared to the previous year. A lot of the jump was fueled by their blockbuster weight loss segment, but with FDA cracking down on these compounded versions of GLP-1 drugs, the question then remains, can HIMS keep up the momentum? And in this model, we're gonna look at the potential revenue of the company, what we should expect in terms of gross profit, operating expenses, and lastly also the net income. We will also have a look at the HIMS and HERS subscriber base that is continuing to grow very, very fast. In fact, my own projections, although quite bullish, I have to give you that caveat. We can see that I'm expecting them to have quite strong growth rate, still going well into next year and probably even 2027. Is this achievable? It's very difficult to say, but I think at the current state, with the facts that we have given at our hands, we shouldn't be surprised if HIMS continue to deliver this kind of pace. So starting firstly with the earnings on the 5th of May. And the expectations, we can see that the price target currently, according to TipRanks, is around $45 and the current stock price sitting at 28 or so. Still, we can see that the stock has been falling off since the 70 or so US dollar high just a couple of months ago, earlier this year. But in the long term, I do think that a lot of you are expecting something like Netflix, right? Remember Netflix, you can see at this graph there, the subscription base from 2011. In 2011, Netflix had a subscription base of roughly 20 million and keep increasing that strongly year later to 25.7 and then 35.6 and so on and so forth. Today, they have a subscription base of roughly 15 times compared to the 2011 number. Netflix is essentially today a global name, the biggest streaming platform. Now, I'm not saying that HIMS is going to be a global name on that scale, but I would say that in the American market, in the US market, they will definitely have potential to do something similar. Still not on a global scale. I have to be honest with you. I think Netflix was a once in a 20 years opportunity. I see HIMS more like a once in a 5 to 10 years opportunity. Simply because it's much easier for Netflix to grow from a small company to a global fan base. Simply because everyone is going to watch TV. Not everyone is going to be happy with American style of healthcare, right? Different countries have different rules. So looking at this graph here, we can see their revenue. Currently, we are at Q4 of 2024, just below 500 million in revenue. We can see that as time goes on, from Q1 of 2023 through Q4 of 2024, they are scaling a little bit. They're going from like not making any net income whatsoever and now starting to make some minor amounts of money, other than the Q3 of last year, which was a one time, I would say. If you exclude that data point, you can see that they're still going from being just barely losing money to just barely making money. So the big question is, how do HIMS and HERS turn into a company that's gonna make $1 billion or so US dollar in net income just in a couple of years' time, maybe 3 years' time? One big part is obviously the number of subscribers that's gonna join the company. We can see that they're on a really aggressive growth rate. Also, the other part that you really have to consider and be aware of is the churn rate, which is likely probably, there's no actual numbers on that. I mean, the churn rate is essentially, not every subscriber is staying. Some of them are leaving after a few weeks or months time. It's the same way as you essentially cancel Netflix subscription for certain times of the year, and then you reactivate it when you want to watch your favorite series or favorite movie. There's no actual official numbers on this. HIMS doesn't share that kind of number, but I would say the best estimates that I've found is probably around 20 to 30%, maybe in worst case scenario, although some people are talking much higher. It's difficult to say, but the important part to see is also that the subscribers going up as well as their revenue going up quite similarly to the subscription increase. So I wouldn't be too worried about the churn rate, in my opinion, at its current stage when this company is in the early stages. Looking at some other important metrics again, the marketing in the blue as percentage of the revenue, on the left being, Q1 of 2023, on the right being expectations for Q4 of 2026 and every single quarter in there between. we can see that the blue bars are becoming lower and lower, hence my expectation that this company will scale well and the marketing will go down compared to as percentage of our revenue. Right now is very high, is going from like 50s to potentially going below 40. Then we have the operations and support part of the company, the same kind of scenario there. Surely but slowly and surely it's gonna go down. The same when it comes to SG&A, the general and administrative, and finally the technology development platform. So when you look at all of this kind of stuff, you can see that combining them in this other graph, in the yellow or orange part with the total operating expenditure, you can see how that bar is decreasing and how marketing is going to be smaller and smaller part of that bar as well as we go into the 2025 and 2026. So the idea of the video was to show you, is it possible that this company will make essentially a couple of 100 million or quarterly net income? I would say it's possible. There is a lot of competition out there. Remember, even the likes of Telehealth and Amazon. But I would say that the way this company is acting, the way they are organically growing, but also like looking at other verticals, like other kind of diseases that they might cure, looking at the wellness segment, which HIMS is going to be very strong at. We know that the men's healthcare, the sexual healthcare, and we also know that they're very good in the dermatology. And I would say that this company is becoming a household name in 5 to 10 years time. That's my guess. That's my best estimate. I believe I'm not the only one having that kind of view. In my opinion, HIMS is in fact the Netflix of the healthcare system, especially for millennials and Gen Z. But also remember, the elderly people, like they might not need always go to the local clinic. They might be just happy to, I mean, if you're in your latter ages like 65, 75 and so on, you might not always need or actually be able to go to the local clinic. And some of the issues that you might have, you might be being able to solve that through a online platform like HIMS. So no matter how you look and dice this pie, in my opinion, HIMS is truly one of the best opportunities out there. Again, it doesn't come without risk. Remember that this company is also increasingly facing more threats from the likes of, for example, Amazon. We have to consider that. We know that Telehealth is still there. And it would be too easy to assume that they're going to have this easy growth in terms of subscription base. So I would really like to see your comments. Do you think this is a little bit too optimistic? Please comment in the comment section your view regarding their subscription. But I do also agree that it's not only the amount of marketing as percentage of their revenue that is important. It's also the amount of subscriptions that they actually keep hold of for as long as possible. So they don't end up in a situation where people subscribe for 1 or 2 months and then leave for like 8 or 9 months and then come back next year. I mean, you can have a quick look at my numbers here as well. You can see that based on a, let's say, 4.9 million subscriber base. Again, this might be too high. I agree with you that probably even some people might think that 3.5 million is too high. I would say 3.5 million, I wouldn't be, right now with the stuff that we know about, I wouldn't be surprised. Remember that they grew 69% last year. Is it possible that they grow with 69% again this year, especially with the little bit more difficulties in terms of the weight loss segment, with the FDA declaring no more shortage, in which they cannot sell as much compounded weight loss pills. So that's going to be for sure a tough ask, but that's also why I assumed, let's say, quite aggressive growth this year, but less aggressive next year. If you could balance this out to maybe like, I don't know, like 55% this year and 50% next year, that would end up in roughly the same spot in terms of revenue. And that would obviously have some effect also on the subscriber base. But probably based on that, you can see that if we go with this rather bullish case of 4.9 million subscribers by end of next year, revenue would be just below a billion, 968 million or so. And then the operating expenses would be 580, which would leave us with a net income of roughly 140 million or so. Still with a substantial marketing budget of 377 million US dollar in my model. And looking at the actual number, you can see that the marketing divided by revenue by Q4 of next year should be around 39%, just below 39%. I would say that's in line with the company's targets. I believe they have mentioned that the adjusted EBITDA as percentage of revenue should be around 18 to 20%. Is that 2026? I don't know. It could be 2030. It's difficult to say exactly when that's going to happen. Again, be cautious out there. Remember that this is a more bullish take on this. I will in the future make a more moderate kind of view on HIMSStock, on HIMS and HERS, and consider the competition for sure, even more thoroughly. So for today, it was just a heads up for the earnings and also potential where is this company going in the closest 2 years time if everything goes according to plan. So anyways, thank you for your time. Please like and subscribe. I really would appreciate it, and I definitely will want to hear your point of view on my numbers, especially when it comes to a subscription base. Is that realistic, or if not, how unrealistic is that? And help me to help you to change these numbers and engage in a better and more informative communication as we go into late this year. So thank you for your time, and see you next time.